The market is currently crashing, so we're going to host an emergency meeting in Data's Alpha Circle. I always like to host these whenever there's significant events in the market. We cover Bitcoin, Ethereum, Solana, ETF flows, sentiment data, on-chain data, and more. So if you haven't joined, definitely do so. It's going to be a great stream. With that said, we are recording right now, so let's go ahead and go over the market. So with Watcher Guru, Bitcoin fell under 100,000. And so it's tagging some of our first levels of that limit order of 95 to 99K. That is coinciding with the 50 EMA. I'll go over the chart in a minute. But obviously a lot of longs have been liquidated so far. Just looking at a few big news articles, what was the reason for it, right? So really, 5 hours ago, Treasury Secretary Bessent says U.S. and China trade relationship is in a good place. There's really nothing per se, at least from here, that's causing it immediately. Now, if we go and dive deep into just the data and looking at that, well, look at this. We're back up to $1.3 billion of liquidations. So I assume this number would be bigger, and I'm surprised it's not a larger number, like 2 billion, 3 billion, 4 billion, considering how much everything has retraced. But nonetheless, we still are at 1.3 billion. So that coincided with a red Tuesday and, everything we still have upcoming. And I'm assuming we have a large amount of ETF outflows today as well. A lot of things are pointing towards a bottom. And I know people are like, you keep saying that, but we've talked about how Tuesday is going to be red, how ETF outflow is probably going to be, a large amount today as well. And Tuesday, and historically, whenever you have 4 or 5 days of outflows, usually you have inflows because again, mean reversion, etc. And also we're getting towards those major support levels on Bitcoin at 100K. And that's the big level a lot of people were looking at. I know even GodsEntry was looking at that when he was saying, hey, in order for me to be confident in this bull market, we need to hit that 100K mark. And so that's something I'll go over as well. But we are very much closer to the bottom, in my opinion, than not, especially with today and how quickly we've actually reached these major support levels. So looking at the liquidation for the past 24 hours, let's go ahead and see exactly what that is saying, because I can't imagine there's too much more to the downside. But right now we had a nice bounce to 101K. Now, if you look at the top, you can see there's liquidation levels near 102.5, near 103.6, and then 105.5. So we do have at least some more ammunition for a further bounce. And then if we go to the 1 week, look at this. The 1 week barely has anything to the downside there. So the big liquidation level is going to be near 111K. And so that's something to watch out for is, we still have a lot of liquidity to the upside, so it's only a matter of time before those levels get tagged. And so that's just the things you have to look at, right? During this time when emotions are the highest, you got to be able to remove the emotion and look at the data, because that's literally all you have. That's all you have, right? Now, we talked about Tuesday being a red day. I'll be honest, I didn't expect it to be this red. I didn't expect it. I thought that, okay, we would come down, we would get to those major support levels with confluence, and at least we'd have a bounce. This is more so like either A, some institution got blown out because they were over leveraged, or B, there's some countries fighting each other, China and the US, and China's manipulating the price, or something going on with Binance and Wintermute, right? Like there's theories, and we'll go over that as well on X. So I'll look at a few other things and see what everyone else is saying. But I think that at least getting that 100K level, it's good that it just happened this quickly, because now it means things should be closer to a bottom. And I'll get Nyko and Shem's opinion afterwards, and see if we can get GE up here as well. But yeah, currently that's what I'm looking at as far as the liquidity levels are concerned. Now, let me just look at my home page real quick, because again, I woke up probably 15 minutes ago and just trying to see everything here. So this guy, he's a really good trader. Bottom is in as soon as the dead bodies are revealed. Let's see a few others. Okay, yep. A lot of people losing their portfolio as expected during this time. And okay, so here we go. So Benjamin Cohen. So this guy is pretty much called every move to a T. He says Bitcoin is at a critical level. Multiple closes below the 50-week would confirm the top being in, as it always has each cycle. Regardless of whether the top is in or if we go slightly higher, I still think 2026 will be a bear market, just like all prior midterm years. So this is what Benjamin Cohen is looking at. The 50-week EMA, something we've been looking at as well. If Bitcoin does close below this, then things won't be good. And now you can see here, just looking at the RSI on the weekly, we are at a critical inflection point. And so this is the level, like I said, we should bounce at. And we'll know more at the weekly close, which is still 5 days away, but nonetheless, this is going to be a big level. There's going to be a lot of volatility, maybe some wicks below it, right? But again, it's going to be the close. Are we going to close below that 50-week EMA or not? And so that's something I'm watching as well. Now I'm seeing if he tweeted anything else. Here we go. Yeah, so a lot of it does seem to be with the government shutdown as well, because that is still affecting the economy. And also here, he talks about the alt BTC pairs, where whenever they find a major low, it's corresponded to the end of QT. And now they still need to go to 0.25, and the end of QT is December 1st. And so now I'd be interested to see where this alt BTC pair is, which we can look at that as well. But that's another indicator, right? Potentially lower until we have a bounce. And so that's something else to watch. Now, besides that, is there anything else as far as news items? I mean, I think that, yeah, for the most part, it just seems we're going to see who got carried out. I mean, we already talked about potentially that insider whale getting liquidated, and now we're starting to see, what's the aftermath basically of what's happening with these liquidations. So yeah, it looks like similar on October 10th is we don't know exactly the reason for the big drop, but we're waiting to see who is the one getting liquidated. So so before I go to the charts, Nyko and Shem. Nyko, I'll go with you first. What's your thoughts right now on the reason for this drop? You think it's basically just market cycles, and there's a lot of liquidity in your 100K, so eventually we're going to have to tag that, and obviously uncertainty with tariffs and the government shutdown? Or do you think it's, okay, some big institutions are getting carried out, or is it some kind of battle between China and the US, and then of course with Binance and Wintermute? Like, what's your thought process, Nyko, of the current situation?
Oh, damn. Can I choose D, all of the above? Is that
Yeah.
an answer on the test?
That is an answer this
And
time, yes.
we have so many confluence about volatility. And I think being in crypto, one of my bias is being hopeful about the overall direction of crypto. And if you look at the weekly charts, this downside is not that dramatic. We're in it and it feels so dramatic. It feels like a damn roller coaster. But on the weekly, there's some support and there was some retrace, and Benjamin Cohen was speaking about it. And as long as we're above that 50 weekly EMAs, even the one on Ethereum. So if I was trading the charts right now with like a 5 minutes, 15 minutes charts, I'd be like, okay, some of my levels are hitting and the trend maybe continues up. But since it's such a large scale, weekly, monthly price action thing, we're feeling the effect. Or psychological aspect of the market is really testing our patience, is testing our resolves. And that's why we've been preaching risk management, because the only way you can continue and go out in profit here is if you truly believe crypto is going somewhere, and that all that's going to happen is that crypto gets adopted, stable coins get adopted, and a few protocols, DeFi and AI agents, go somewhere with this. 99% of alts won't survive, but I truly believe that there's market fits with some of these DApps like Hype, like Pump, like Anna, and many other DApps that are amazing, like Aave, and are generating revenues, generating usage, and these might very well survive this altcoin apocalypse. And it was kind of needed. Whatever's happening in the news, there was like so many altcoins, like 10,000s of altcoins, and every day I learn about a new altcoins in chat or somewhere, like, oh, is this altcoin good? But we need fewer altcoins, concentrated bets, and that's where crypto can strive in the future. And that's why 95% of my portfolio is in spot, because I'm just accumulating during big liquidation events. I reaccumulated here, and I'm just thinking crypto succeeds long term. But right there is going to be very tough, and if you're beginning and if you're already jumping into leverage and really not too proactive with stop loss and risk management and position size, you're going to feel this market, and you're not going to feel it in the right places. So I think it's a confluence of everything that's been happening. And if I might add, speaking for a while, are you gone? But if I might add, you said dead bodies, It's very true. I saw Arthur Hayes speak about this yesterday. We haven't seen the impact of treasuries, of protocols that have got bankrupt since the October 10 crash. And in retrospect, it makes so much sense. I was there during the FTX crash, and there was like a lot of dead bodies after that kind of threw us into another leg down. But that was the bottom. Once the dead bodies resurfaced, the bottom was in, and then there was compensation for some of the exchange that liquidated their members or lost their funds and whatnot. So I think crypto can heal for this. It's gonna take a longer while. The route is gonna be full of detour and surprises, and it's the price we pay for the upside we'll get once we get there. And very few can handle that downside to get the upside.
Absolutely. And Shem, before I pass it over to you, I just want to echo what Nyko was saying, guys, is, you know, it could be all these reasons, right? And I mean, this is something that's unexpected. That's why they're called black swans, because you're not necessarily seeing them, but it's a culmination, and who knows who else is left, right? As far as the bodies are concerned, because institutions, they do over leverage themselves, and this is the result, right? When there's a downturn, when there's some spiral, when there's a cascade of liquidations, institutions don't manage risk properly. You guys may think that institutions are the smart people. A lot of times they're over leveraged, they're overconfident, and that causes them to actually be more careless than the average investor. And so that in turn causes the average investor to get liquidated, because even though the average investor is managing their risk, these institutions aren't. And that's what we saw with Alameda, right? And the whole, I mean, the FTX situation, even the Terra Luna collapse, right? I mean, billions of dollars were liquidated during those collapses. And that's something that, again, it's just part of the market, part of the dynamics. And Dave was saying that our voices, you know, are very reassuring, that we're on top of the game. And I, you know, I love you say that, Dave, because Nyko, Shem, myself, we've all been in this before. And yes, while it is unfortunate, yes, it is frustrating, yes, people are losing a lot of money, it's not the end, right? You just look at the data, you look at the market cycles, this is perfectly normal. I mean, usually in bull markets, we say 20 to 30% pullbacks. Bitcoin's all-time high was what, near 126K? What's 30% pullback from that? Below 100K, right? So it's, I mean, you can see it's not out of the ordinary here. While yes, it does seem a lot, as Nyko said, it's not that much. And so the best thing you can do, one, you know, don't cry about it. Don't say poor me, because literally everyone lost money today. More, I would say about 95% of people lost money, especially if they were over leveraged. And so now it's just take a step back. Okay, now let's play this level by level, just like we have been every single time. Ahmed was asking me, okay, should we long right now, or are you going to make a long call? The last long call I'm making is that Bitcoin limit long at 95 to 99K, which I think should have gotten tagged. And so that's the one. And then after that, I'm just going to be patient. Okay, because I'm just making calls at huge, you know, at very significant levels. And as we saw with Benjamin Cohen, that 100K is where the 50 weekly EMA is at. And so that's why, okay, I'm assuming we're going to wick below, because we've basically gone further than most think on every flush. And so why not place your limit longs lower at 95 to 99K? But besides that, be patient. We have the new moon coming up November 5th tomorrow. We also have the tariff negotiations, or I should say, Congress is going to weigh in on if Trump's tariffs are, I should say, legal per se, or, you know, if they're going to end or not. That's going to have some type of effect on the market. And so, yes, there's going to be volatility this week. But at the end of the day, you just have to maintain your composure and know that this is part of a normal market cycle. Unfortunately, it's, you know, the bad part, not the good part. But as a good trader, you have to be able to take a step back, detach emotionally, and just look at it level by level, and then decide, okay, how am I going to pick myself up from this? And how am I going to consistently compound the profits and, you know, deal with it afterwards? Because usually after the worst days, usually have the biggest bounces. And so that's where we're going to walk you through it every step of the way. That's why I have these live streams, and we'll continue to do that throughout the week. So with that, Shem, on to you. What do you think's going on right now? What's your mindset right now? And what are you thinking moving forward?
Thanks, buddy. I can't share my screen. I wish I could, but I strongly stand with the point that I made 2 days ago. I might seem like a conspiracy theorist or like a weird guy, but this event basically confirmed the little BTC graph that I have drawn and shown to you, if you remember 2-3 days ago. I can't comment on all these events like Black Swan and everything else, but it's just like the more these things happen, and the more I just zoom out in the graph and pay attention to what has happened historically before, it just seems all played out to me, you know? It just seems it's like the same thing over and over again. Maybe later when you're done sharing your screen, I'll share my screen as well, and I'll just go through a few of these points to show. But you know, that's all I can say, because otherwise I could be sitting here and looking at all these events and wondering if Binance is gonna, you know, wipe everybody out or not. Should I share my screen now? Is that okay? Or
Yeah. Go ahead.
all right, let me do that right now. Entire screen. Just let me know if you can see my screen.
Yep, we can see it.
All right, great. Let me. All right. So here's the thing. There's a lot of things happening here because I've actually been going back and forth with GodsEntry here, and he showed me some few cool things. But I just wanna, let me zoom out here for a second and show this. If you guys see this little bump here, it went up, and then there was some kind of consolidation and down. This is literally the same thing. And same as the pump here. The only difference is that right now in this bull market, we have way more volume right here than we ever historically had down here. So there's this theory in the Elliot's wave graph, which I love very much. And it's basically that everything we see is going to obviously repeat, but not necessarily the same way, which actually makes sense. Because if we take into account that we have way more volume than before, this spike here is literally the same thing as this, just prolonged. This lasted for a month, or this lasted for 4 months. And then if I was to, you know, just look how these patterns are repeating literally over and over again. We can go into detail right now and say, oh, well, there was the first bump and then it went down, and there was the first bump and then it went down, and then it went up, down, and up again, and it went down, up, and up again, like right here. I mean, I need to zoom in so you can see that. Down, up, and then up again. But if, wait, there's a little, it's literally the same thing over and over again. But let me just look at this here. For example, if we look at this part here, where the 20 something billion dollar dump happened, if we look at the pattern, it's down, up, down, right? And when the bear market started, if we scroll back here, it's literally down, up, down. Now, obviously, it looks slightly different. That's only because of volume. But just remember, down, down, and then up, down, up, which is the opposite. When we come back here, it's literally the same. It's down, up, down, then up, down, up. Then it's down, up, down again, right? Reversed. And I swear to God, it's right there. And then it's the reverse, right? So we went down, up, down, up, and then down, up, and down again. But I mean, obviously, the volume is different, guys. Pay attention, the volume is different because we have way, way bigger volumes now, and serious institutions and sexes are bigger than they ever were. But to me, it's just the same thing we're playing over and over again. But that's all I can add. CryptoData, back to you guys.
Gotcha. Appreciate you sharing that. Yeah, and there's different fractals people are looking at from past cycles, and I know that some do come into play. So appreciate you sharing that, Shem, and that's something that we'll definitely keep an eye on as we move forward as far as price action is concerned. And if we continue following that, then again, that is something that we'll keep in mind and say, okay, are we starting the bear market right now? Well, if we stay below 100K for a couple weeks, absolutely, then the bear market is starting. But only then will we confirm that, and then that's when that will come into play as well. So let me also get, let's see, let me go ahead and invite some people up here. Let me invite GE up here as well. Awesome. How you doing, GodsEntry?
Pretty good. How you doing?
Awesome. Doing good. Did you have some charts you wanted to share with us today? And curious on your thoughts.
Yeah, well, I posted. I tried to get everybody along. I don't know if I hit the right alert when I posted it in there or not, but we'll see. Let's get everybody my general idea here. You see my screen?
Yeah.
Yep, we can see it.
All right. So first off, I finally got what I wanted. I wanted this wick taken out. So let's zoom out here for a minute. I've been waiting for this wick over here to get taken out. There's all liquidity sitting here. So I'm I'm not 100% positive this level's going to hold, but I've had this zone marked out, and we were kind of inching our way into the zone, so I'm just like taking a trade, managing my risk from here. And before I get off, I'll show everybody where to put your stops in case we lose this zone. But I just want to show from a zoomed out perspective, like this is our wick. We need to take out this wick. This wick was on a Friday. The big players like in New York and wherever, the major traditional markets aren't going to let everybody catch these lows on the weekend and not come back and get them. It's not generally, it's not going to happen. It did take some time. It would have taken almost a month, but we came back and we finally got it. So now I'm interested in longing because that was done. That was my first concern. That was out the way. What we need right now, we need to build some divergence on like 4 hours, 8 hour. Let me zoom in here for a minute. So I got everybody to scale into this zone. So everybody should kind of be in a small profit at the moment. But what I was doing is it wasn't really a scalp trade. I was trying to show you how I approach catching a swing trade. I just inch in slowly. I just got my feet wet a little bit in here. So I said I scaled in at like 1/6 of my total margin. And I only got 4 parts filled. I still saved, believe it or not. What I like to do when I'm catching these swings, or attempting to when a market's like this, I actually put my last 2 orders where I would put my stop. So if you guys can think, that's why I like to wait for market extremes. I don't know if I'm explaining it right, but I like to put my orders where I would put my stop to kind of protect myself in case I'm early a little bit on these bigger moves. But yeah, I just wanted everybody to get orders throughout the zone. Will it stick? We'll find out. This would be the first part. I would like to see some strength here. I would like to see price action. Right now we're at 101. We dropped from this 102 area. I'd like us to see get back through here and hold this for support. And then at that point, maybe I'll either add my other positions or I'll just have what I have. But the other thing I'll be looking for is a rejection area as well. If we can get back up here, if we start to reject there, we may go lower. So if we do get in profit up here, we're going to move our stops up in profit. Right now, I still have a couple orders down below. I'm actually would tell everybody right now for the Bitcoin trade, probably going to move my stop like, we'll say like 0.5% from the low here, just in case it comes down one more time. Because I do have orders. I had orders at 98, and I'm moving them up to here in case this gets filled, and I'm tightening up my stop. Because we lose this, we're probably coming down to 98, not even 98, but maybe all the way down to 92. Because we have a CME gap at 92. So everybody was waiting for this 100K. So sometimes what you do at these levels, everybody's eyeing, one of 2 things are going to happen, or one of 3 things are going to happen. Everybody gets the level, and everybody gets in on the crowded trade, or they front run it so nobody can get into it, or they blow right through it. So those are like the 3 things that are going to happen because everybody's been looking at this level for quite some time now. Like I said, 3-4 weeks. So they might have tried to front run it a little bit, but if we reject up here, like I said, coming down to 98 to 92 is a strong possibility. So just to give you an idea on the current trade.
Gotcha. So real quick, GE, so would an invalidation be a close below 99K on the weekly, or what are you looking for it to get out?
Well, right now, sorry, I'm trying to explain how I do this. So technically, yeah, it's a scalp at first. I mean, like that's how I view it, but really, I'm looking for a swing trade. That's why, I waited this long to get into it. I'm treating it like a scalp at first. Like I said, we get this rejection here. That's not going to be good. I'm getting rid of this line here. If we get a rejection here, that means we're going to have more continuation of downside. And I may stop out in small profit, maybe save a little bit, but would think we're going to come much lower, at least 98, 92. So I want to get above this 102 level so we start to build some strength. But
gotcha.
Yeah.
Okay.
You know what I mean?
So a failure to close above 102 is, basically means 92 could still be in the cards.
Right.
Gotcha.
This is why the whole theory played level by level. I mean, we just lost this. I know this is a lower time frame, but you got to see where the market dropped really hard right here. So, It's like kind of like a market imbalance candle is what I call it. So we should come back up to test it, and we could come back all the way up here to this monthly. And once we get above these levels, then, it's a stronger trade, but it's one level at a time. 102.
Exactly.
And back up to 103, and then we just monitor the trade more or less.
Yeah.
See how it develops.
I know you're not really a fundamental guy per se, but do you have an idea of what you think caused this drop? Is it just overcrowded longs? Is it an institution got blown up? Is it something to deal with, macro?
I said that before, like that big drop we had. People were hurting. It usually takes a good few weeks for it to come out. So I saw you brought up something. So yeah, somebody probably got hurt here, and they try to cover themselves. They can't do it, so then they get exposed, and that creates fear. But all this fear, and all that's fundamental. This is why everybody's bearish right now. I want a long, even though I actually am a little bit bearish overall in the macro, but this still is a good trade in my eyes to attempt.
Yeah.
I'm going to show you something else. I've been pretty bullish for the last 3 years. You know that data, and it's only over the last couple of weeks where I've started to this drop ruined a lot of price structure. It ruined a lot. And with everybody getting taken out of the market, it's not so much the liquidations. How many traders got knocked out? Like 1.6 million traders or something like that?
Yeah, it was a big amount.
So I think the traders mean more than the actual liquidations, because you don't have that many participants. Now you literally just have whales versus whales. So, they're going to go after these wicks is what they're going to do, reposition themselves. But here's a chart that I found yesterday after the 2-month close. That's kind of, I'm leaning more towards that we could be in a bear market. And I know I've been about this extended cycle theory thing, but this really concerns me, this chart right here. I looked at the USDT dominance, and I just happened to mark it out. We have this, a second.
Yeah, that downtrend too, or that trend line resistance getting broken.
So this is, each one of these vertical lines has been the top in the market, and it's every time we tested this uptrend, right? Now, if you didn't know what this asset was, you'd be longing the heck out of it right now. If you didn't know what this was, I would automatically just long this and ride this up, whatever this, it didn't matter what it is, just by the way the chart looks. So that's very concerning to me. So by this, now if I compare this with Bitcoin, every time we hit that trend line, I just found this the other day, so hold on a second. As you can see, when we start to bounce up off this trend line, that happened to call the top back in 18, it was like a month late. This was dead on off this trend line, and we did this back in September, and quite frankly, these 2-month candles on Bitcoin, it's just staring me in the, I really can't be bullish looking at these last 2 months. These are 2-month candles, so that's 4 months worth of price action. These candles are a top,
Yeah.
It looks like a top to me.
Yeah.
I'd be kidding myself if I didn't, think that, because I do believe we could have an extended cycle. I believe in the whole theory, but now I'm starting to switch my thinking.
And that's the sign of a great trader, is someone who's also able to be unbiased and adapt to the changing environment. And while yes, there are arguments for an extended cycle, there's also arguments for a cycle top, right? And you have even people like Benjamin Cohen, who thinks the cycle top is going to be in this year, like the next 2 months. And so you can't ignore the data, like you said, when it's staring you in the face. And so now we need to have 2 scenarios here. Well, if the cycle top's already in, how are we going to adjust our trading strategy? Because you make money both ways, right? And now at this point, does it become, okay, I'm going to start taking some shorts at 102 or taking some hedges at 102 on the bounce until the market gives me a reason to switch to fully, being long biased again, right? And that's the whole, okay, until we make higher lows again, until we break some trend lines, et cetera. And so I think that, you yourself, you thrive in these markets because you scalp trade a lot. So you're always longing, shorting, within a couple hours. And I think that that's something that everyone still needs to have the mindset of, that, okay, if we are in a bear market, how are we going to adjust our strategy? Well, on the longs, it's just going to be more dead cat bounces, but really we're going to swing to the downside now versus, the vice versa. And that,
right.
Yeah. And so it's just being able to look at both sides.
It's basically the same thing. You just got to kind of switch your mindset. You can still, just like in a bull market. So let me just go back and try to explain this a little bit. I don't know. I don't want to take up too much time, but I'm trying a long here, because if we are going to have an extended cycle, it's going to be from this level or this next level down here. And even if it's not from these levels, we should have bounces from these levels, so you can still profit from them. Now, here's what could happen here. I mean, all these levels. What's good about levels is once you lose them, they turn into resistance or support. They don't go away. So that's why, you know, I'm always posting these zones. But here, let me clean this up a little bit. Oh, you can just see it like that. So even if we bounce from here, we got this trend line here, right? We could bounce here and go all the way up to 107, reject, and then come down. So all this is, as a trader, that's what I'm thinking. I'm just looking at levels and rejections, and I'm going to take trades on both sides all the time. But what I will say is, in a bear market, for me personally, it becomes a trader's market. Like, I'm not going to be into too much holding of coins and things like that. I'm going to become really, really protective of my capital, and I'm just going to take easier trades. I might lower my leverage, anything, you know. Just want to really protect your capital, because believe it or not, if we have a bear market, it's not as long as everybody thinks. The bull markets actually are longer.
Yeah, exactly.
So,
the bull is usually 2 or 3 years, or over 3 years, and the bear is usually 1 year. I mean, it's fairly quick how quickly these rotations happen. But yeah, I think that the big thing is going to be, and real quick, I mean interrupt, but the big thing is going to be once we end quantitative tightening December 1st. Okay, when's QE going to start? Right, it's going to start in March. It's going to start April, May. Is it going to start right away? I mean, there's so many unknowns with that. Obviously, the government shutdowns added on top of that, and these various unknowns. But that's going to also be something that people are watching. Is, hey, if money's injected back into the economy, okay, let's see what else can happen. Or if Trump replaces Powell in December and then really starts ramping up, the rate cuts. And I mean, there's still so many things that could extend this cycle, like you were saying. That's still a possibility. But until we have that confirmation, we're playing it level by level. And I think that the big level right now is 100K. I mean, that is literally the line in the sand. Yeah. 100K is 2017's 20K, Like,
yeah.
It's...
And then a flush out to 92 would be like a max pain scenario. And it'd be really easy for them to long from there as well. Like,
mm-hmm.
So I was going to show you another thing in case, we do go up. I'm going to say when I start to get bullish again, because right now I'm more like cautious. I'm just trading level by level. Nothing like bearish or bullish really doesn't matter to me at the moment. But so we get bounce here. When we get back into this rising wedge here, if we get back above here, yeah, we can do what Shem was talking about. We get that extended push up. But believe it or not, this is a bearish pattern. So even if we get an extended cycle and a push up, I'm at the stage in the cycle where if we get opportunities for these rallies, I'm looking to set some swing shorts. I missed a couple shorts. I just got here a couple weeks ago. I was hesitant about posting shorts. It's a little bit my fault, but if we get a rally, they're for shorting at this point in my perspective. Until the market proves to me, it starts, I want to see strength here. There's no strength at the moment. So
yeah, just play what the chart's giving you, 100%. 100%. Right. Did you want to share any other charts or?
Absolutely. I want to say I agree with you. I agree with both of you.
Yeah, it's not about being right either. I'm just, just playing level by level. And there's a time where I go risk off and just trade on, if that makes sense. And then when it's
absolutely.
Yeah. When it's high risk, then I'll start to trade and buy other coins. But right now, it's easier for me just to protect my capital and just trade what I see. But before I get off here, let me just show everybody. I'll post a stop because I posted some trades on Scalp channel. I'm gonna move my stop up 0.5% from here. I still have 2 more orders to get filled if they get filled. But so I'm gonna put a stop somewhere around 99, 99.2, somewhere in this area. I'll post it in the chat or the channel rather. And then is this the chart? Yeah. So this is what I'm really thinking, ETH. I've been waiting for this to come down here as well. We have the yearly pivot. Very rarely do we walk through any one of these yearly pivots. At the very least, we should get a reaction. So I still have orders down here around 31.85 to get filled. I didn't fill all my positions as much as I got 2 more orders left for this to get filled. 1 more order left for Bitcoin. But I'm looking for a bounce here at the very least. And manage my risk. I'll take a loss for this trade. Attempting a trade here. Oops. Well, I definitely expect this yearly pivot to get a reaction at the very least. And we have a nice liquidity zone. Let me just zoom out so I can show you. Like, we took out those wicks. We took out this low here, this low. So we took out all the liquidity. We're right in the liquidity zone. We lose this, it gets nasty quick. So I will post my stop losses for ETH and Bitcoin trades.
Absolutely. Perfect. Appreciate that, G. It's a lot of good information you just shared there. And I think, it's great to have the confluence as well. Like, a lot of us have, similar thoughts of these deeper levels and tagging those areas of liquidity and being good as far from a risk reward perspective. And even the indicators, like you look at the stock RSI on the weekly, it's oversold for every token, Bitcoin, Ethereum, Solana. You look at the daily now, it's starting to become oversold on everything. And so with these flushes, confluence is key, and that's what you have to look at. And I'd almost guarantee now that we'd be in extreme fear on most, fear and greed indexes, whether it's coin market caps, coin glasses, coin geckos, etc. I think that now, after today, all of these measurements and these metrics are going to be at extremes. And so just seeing that, okay, these metrics are at extremes, extreme fear, liquidations are, near highs. Now liquidity with Ethereum, Solana, Bitcoin is being tagged, and these major yearly pivots, monthly pivots. And this is also a level that we were talking about earlier on Ethereum. I was saying if the daily closes below 35 or 34.60, we're seeing 32.70, and that's basically where we're at right now. It's 32.70, and it's amazing, in lack of a better word, how quickly these drops happen whenever you have these flushes. Because again, you've heard the term, stair step up and elevator down. Basically, on all these charts, is when things flush, they flush quick, and so being able to have your limit orders ready and be patient is the name of the game. And that's why, especially during this past month, we've focused on being patient. Yes, we could make a lot more calls, but we're all about, risk reward. And I also mentioned to a few people, I said, statistically, this is a game of probabilities, and you're not going to win 100% of the time, maybe 70% if you're really good, but you can still expect to lose 3 out of 10 trades, and that's fine. Even 4 out of 10 trades, right? Just as long as you lose small and you win big. It's all about that. So technically you could have a 50% win rate and you could still be profitable, as long as you're managing risk appropriately. But at the end of the day, it's on these losing trades. These are black swan days, and you can't necessarily predict these all the time, but you can manage your risk. And that's what we preach here, is just being able to manage risk despite what happens in the market. Okay, we have the flush, fine. Have stops in place. Okay, I didn't risk all my portfolio, risk a small percentage of it, on to the next trade, right? Don't dwell on these trades, guys, because when you dwell on these trades, it's going to affect you for the future. GE knows plenty of times, we've dwelled on trades in the past, and it's only affected our mentality moving forward. But the sooner you can accept the loss and learn from it, the sooner you can become profitable again, and the sooner you can become a better trader, because you learn the most from your losses, not from your wins.
And I was going to add one thing. I don't know if everybody realized, I haven't been longing too much because I've been waiting for this. And that's another reason why I'm taking it, because I've been planning ahead to take this trade. This is the trade I've been looking for. If it fails, it's okay, because I'll just take the next one. But I've been waiting for this trade. I'm going to take it. I don't care how much fear is in the market. Just playing it by the chart, So the big deal is always stick to your plan and just don't deviate. Don't let emotions come into play. Just, definitely use stops. So I have stops, but I did a wide grid here basically to fill orders. So I try to make it safe for everybody.
Absolutely. Perfect. Is there anything else you wanted to share with charts-wise, or any ideas?
No, that's pretty much it.
Awesome. Hey, well, appreciate you sharing those charts. Always a pleasure whenever you can see your charts and just, again, basically ground everyone, right? And just show them this is all a game of levels, and you play it level by level, and it helps you plan ahead. Nyko, I saw you unmuted your mic. What do you got for us?
Yeah, I was just going to say plan the trade and trade the plan. And during a trade, it's not the time to plan. It's like everyone comes and sees us like, hey, I'm in this trade. What am I doing? You should have figured all those questions before the trade, because now you're psychologically involved. Your neurons are going full capacity. You're sweating it out, and you're not making the right decisions. And honestly, I'm also a victim of that. Sometimes I don't respect my own words. It happens. And I'm like, okay, I'm being dumb right here. So you gotta train beforehand, before the trade. Be like, okay, this goes really up, it goes crazy. What am I gonna do? Am I gonna be greedy and be like, I'm gonna wait for more profits, or really book those profits at the levels I intended to? And same thing for the downside. Uh, I've heard so many times recently, I was gonna go to sleep and really like check the trade tomorrow and be like, okay, I'm in profit, it's fine. No, you gotta really set those limit orders and be disciplined, because otherwise it's the market that's gonna trade you.
Absolutely. Great
You know what?
advice.
I wanted to add one thing right there. So there's certain times in the market where I would say like now it's fragile. I really don't like going to sleep with trades open, like at those times. When the market's trending, that's another story. But when the market's like uneasy, uncertain like this, just throwing in orders is tough to do sometimes, and wake up the next day and see what's happening. So I try to stay away from that because, you know,
Yeah.
the market conditions the way they are.
100%. Absolutely. And that's the thing too, is just different strategies, right? And yeah, if you go to sleep with the trade, have a stop loss ready. I mean, that seems to be the name of the game, especially this whole market cycle. I mean, that's a lesson that's been echoed, is because there can be a flush, and even if the daily close below a certain level, I mean, it can flush, 10% more than expected, right? Between that. So 100%. Okay, cool. So now we're going to go over some macro charts, or the TradFi charts for the S&P, gold, and the DXY, and kind of see what I'm looking at here. So the S&P here, it's playing out as far as from our viewpoint, from the bearish divergence on the weekly RSI. You can see this, the S&P now is crashing as at 67.75, and the RSI again is crossing to the downside, forming a bearish divergence and crossing below its signal line. So for the S&P at a minimum, I would look for 66.30. If we continue here, it's only Tuesday, so we still have 3 days left for the market. So this is, again, a bearish pattern. So keep an eye on this. If this continues downward, I mean, you still have, you can see, again, with this RSI on the weekly, it called the bottom March, and now it called the top when it became overbought, right? And so it's just standard cyclical nature of it. Potentially it could even go to 6,400. But like Rebellious was saying as well in the chat, is crypto, like it or not, it's still tied to the stock market. And if the stock market's crashing, it's going to make a hard argument for crypto to rise. I mean, and even if when the stock market was pumping, crypto didn't always follow it. And so it's even that much harder to break away when it's crashing. And so right now it's just, you have to, again, play the market level by level, like GE was saying, and at the same time, just be realistic of where we're going and just manage risk accordingly. Now, gold, this is another interesting one, because I would expect gold to at least be break even on the day, but gold's even declining at 39.40. So what does that tell us, right? When you have gold declining, which is historically a hedge against inflation, a hedge against uncertainty, and now it's following the S&P. So is everyone just, because gold traded like a meme stock basically for this whole year. So now is everyone just taking a risk off approach of the market? Because gold is, basically reached that euphoria stage where everyone is waiting in line to buy gold. And so now it's treated like a normal stock. There's so many nuances this cycle versus previous cycles. And we're watching it real time. Now, needless to say, gold is still a better hedge versus the S&P for uncertainty. And so that's why it's not declining as much. But yeah, I'm going to be watching this 39.40 level. And you can even see here the RSI cross below its signal line on the weekly. So technically it could still have some room to go. But unlike the S&P, really, there's not much bearish divergence, unless you're going, really, even though there's not any bearish divergence here. So versus the S&P, where you have a lot more potential for downside. So I still think gold will be the better bet if you're trying to hedge. But just very interesting to see the parallel relationship here between gold and the S&P. And then looking at the DXY, so the strength of the dollar here, it is sending, right? And so the DXY has the inverse correlation to Bitcoin. And so now with the DXY sending, is it going to reach this resistance at $100.20 and reject from here? That was the wick that we went to in July. And so this would be the perfect spot to reject. Now, the only thing is the RSI is only at 55. It's not overbought yet. So we could still have more price action to the upside, which if that's the case, heck, now you're looking at 101 basically for the next level. And so like GE was saying, we play this level by level. And yeah, at the end of the day, it's let's see what happens, right? We still have 5 days until the weekly close. So yeah, that's why another reason why you're seeing the DXY so strong, Bitcoin's crashing that much harder. And so it's just, again, you have to look at the relationships and just play them accordingly. So I'll be watching the resistance here and keep you guys updated with that. And then also looking at the overall market. So let's refresh here and let's see what the top gainers are, because there's always some outperformers. I know people were saying that Aster may actually be outperforming. And so let's go ahead and look at that. So right now, Bitcoin's 100.8K, 5.8%. Ethereum's actually underperforming 9.8%, 3274. Solana 7.2%. If we look at the top gainers, ICP 53%, Dash 4.5, Mantle 1.6, Aster is 1.4. It's at 95 cents. Aster's been holding above 90 cents like a champ. I know that CZ, people were giving him flack because he said he wished he bought near 91 cents, and now price, was around there, and people were saying, are you still going to buy? So potentially CZ could be buying around that 91 cent level. Very interesting to see the price action on Aster. Again, I'm still hesitant about it. I haven't traded it since the last time we got stopped out, but it is something interesting to keep in mind, especially as there's volatility and if it continues to outperform or not. And then Mantle is that Bybit token, and so that's actually held up fairly well. And then trending tokens here, we have Momentum up 236%. This was actually a token that just launched today. And so, it's doing extremely well. So congratulations. It's on the SUI platform, and they're doing very well. They deal with liquidity, and yeah, it's a very hyped launch. And so that's something as well to keep in mind. But nonetheless, let's go ahead and look at the Fear and Greed Index. So I was telling everyone that, look for the extreme fear levels in here. And right now, the Fear and Greed Index is at 27, actually, but it will update later today. And that's going to be the level I'm watching is, okay, do we have it go below 20 or do we have it stay within this fear area? Now, personally, I would love to see it below 20 on CoinMarketCap, and taking a little longer to load, but right here you can see 27. So I would love to see it below 20 later today, because that would mean that we're in that extreme fear area. And if you look at the chart previously on March 9th, March 10th, and then, it went to extreme fear. You can see the price of Bitcoin in this dark gray line here. It was at 80.5K. We bounced all the way up to 87, which is a little less than 10%. And like GE was saying, right, we could go to around 92, 96K. Then we bounce up to 102. That's between 5 to 10%. Then come back down, retest for a double bottom. That was April 8th, so about a month later, we retested again. And then we went higher for all-time highs after that. And so could that be the blueprint that we're doing now? Could we have a dead cat bounce to 102, one more flush lower to scare everyone below 100, and then finally go for all-time highs, in December, per se? So that's something that could very well happen, guys. And so again, I want you guys to just have all scenarios in play. But matter of the fact is, once we get below 20 on this Fear and Greed Index, because I know there's different measurements on CoinGlass, CoinGecko, etc. Once we get below 20 here, that's when the value add becomes so much better to buy versus sell. And so that's what counter sentiment, human emotion never changes. That is something to watch out for as well. So keeping an eye on that. Now let's go ahead and look at the ETF flows. And this is something else that I'm watching for today. So let's go ahead and refresh and see where those flows are at. Because like I was saying, whenever you have multiple outflow days, then usually an inflow day is very near. 4 or 5 outflow days usually means a reversal is near. And so for Ethereum, we had 4 days of outflows. A reversal should be near. We should have some days of inflows over the next few days. Today is lining up with that as well, because tomorrow's a new moon, etc. Right? But something to keep in mind. And then obviously Bitcoin did have 4 days of outflows as well. And so it's just a matter of time before we can see this turn to inflows again. But yeah, just a lot of fear, a lot of liquidity getting tagged, and a lot of outflows. So all things you want to see before a reversal happens. But looking at some charts, so I'll share mine as well. I know GE was sharing his, and Shem shared his as well. But here's one for Ethereum. So here's what we're looking at for this. And this is exactly what I was watching for, okay? So we had the 200 EMA on the daily. And we had this confluence here with trendline support, also horizontal support. And we bought here. And it looked like it was bouncing. It went up to 36.53 actually. It bounced nicely, almost got to our 37.10 level, and then just tanked. Okay, so we had the right idea, but you can see this drop. And just looking at previous data, just from risk reward perspective, every time it came down to this level, we bounced, right? Unfortunately, this time it just dropped. But would I take that trade again? Yes. If I have 3 areas of confluence, absolutely. Because at the end of the day, it's all a game of probabilities, like I said. And now what's happening is, well, we dropped exactly to 3270. 3270 was just below this last wick that we had. GE was saying this wick is going to be filled, and this wick was filled. And so now if we look at the indicators for Ethereum, okay, let's see what else happened. Also, this was another thing that happened is the RSI was testing this trend line here. It was resistance, support, resistance, and then it broke through, and also broke through this major support here, and it was a huge crash down. I mean, it's basically picture perfect crash down. And that's what caused that big flush. I thought potentially maybe may bounce here, but it had the flush, and also this trend line support turned resistance, and that had a flush as well. So now here's where the question becomes, are we going to bounce over the next few days? Because the RSI is finally starting to get oversold. It seems like it's taken forever on Ethereum. And then the stock RSI now is starting to get oversold. So these could very well still stay oversold for another few days or even a week. Okay, I'm not saying you just have to bounce right now. I'm saying that the risk reward is starting to be in our favor even more so when both of these are oversold. Because the last time both of these were oversold, I mean, we really have to go far back, okay? It was down here, April. What happened April 8th when both of these were oversold? Boom, it was the bottom at 1470 before we bounced. And we went all the way up to all-time highs. Okay, so could this happen again? I mean, if we're looking at apples to apples here, both of them were oversold, waiting for it. Not quite here yet. September 25th was closed, but RSI wasn't oversold. And now we're starting to get both oversold again. So could it be the bottom? I'm not saying it's going to play out exactly, but I'm saying that indicators are the same position they were, or close to the same position they were as the April 8th, April 7th. I would say April 7th, or April 6th is probably where we're at right now. It's just starting to get oversold, okay? So that could mean potentially a few more days of a flush just to really get people bearish and then start the uptrend. If we're talking about fractals or at least trying to look apples to apples here, then that would mean just a few more days of downward price action, which honestly, if we did have a few more days where price just consolidated and then continued down, that would definitely get people bearish, I guarantee you. And so could this happen again? Again, I'm going to watch for that. But it's just very interesting just to see the similarities with that. So something I'm watching with these two indicators. Now, as far as, again, where I would bet here, I mean, 3270 is a good level. And then below that, you have to look at, okay, where's the liquidity at then? Well, you had some wicks, you had some support at 2930. And then, of course, you had 3000, 3050, right? So 3050 to 2930. That would be a big liquidity level I'd watch out for. And again, you could, however you want to place that order. But my thing would be, okay, are we going to hold 3270? Maybe a daily close below that could be invalidation, or a 4-hour close below that. And then the next levels, again, 2930 to 3050, because 3000 is that psychological level. And so that would be the next level I'm watching for if this 3270 does not hold. But you can see there is a lot of supply and demand near this 3270 level. So keeping a close eye on that right now. But again, not making any trades on Ethereum. Just want to make that clear yet. I'm still waiting for confirmation just because these indicators still have potentially a couple more days before they get oversold and actually consolidate before higher. So, but that's just my thoughts on Ethereum. The real value add is going to be 2930 to 3050. Now we'll go ahead and look at Bitcoin. And I have the same thought process as GE here, where the risk reward is very advantageous at our current levels. And so if we go to the weekly chart, I mean, you can see that this 50-week EMA, which everyone is looking at right now, that got tagged. And that's actually, at risk of getting, broken down and actually closing below, which the last time that we closed below it, you could say, I mean, technically we closed below it August 14th, 2023. And then we stayed below it for, 5 weeks before going to the upside. So technically you can still stay below it for 5 weeks, but we would not want to. I mean, I would say this is more of a likely scenario. If we close below it like we did in April of 2022, then we have much more room to the downside. Okay, that's more likely. Or at the very least, we closed below it here, was at 42. We went all the way down to 34. I mean, that's a 30% drop from closing below. It reacted as resistance. But you can see how significant this 50 weekly EMA is on Bitcoin. I mean, it's basically being respected as support, resistance, broke above it, couldn't stay above it for a week or two, crossed back below, resistance, support. I mean, this is a significant level, guys. Everyone is watching this 50-week EMA. And so my hope is that, okay, we're just wicking below it, which is fine, but in 5 days we can close above it. If we don't close above it and we close below it, let's just say we close, say 99.7K. At that point, well, like GE was saying, we could start to be in a bear market. I mean, we could be in a bear market already, but the confirmation would get closer. And then what we'd be watching for is, okay, is this just a couple weeks below it and then we close back above it? Or do we start getting much further away from it? And that basically confirms the bear market, because notice when we closed below it in the past, we didn't really get that below it, right? I mean, it was just hovering just below it and then we crossed back above. Whereas when we really started the bear market, I mean, it crossed below and then just kept going down. Okay, and yeah, so that's what I would be looking for. Is I'd be looking for an extended move down further away from it to confirm, okay, we are in a bear trend at this point, bear market. Really start looking for shorts on the retest if we come back to the 50 EMA again, kind of thing. So that's what I'd be watching for this. But looking at the weekly indicators, and this is the same for Ethereum as well, is the stock RSI is oversold. I mean, look how oversold the stock RSI is on the weekly. So that is something to watch out for. Eventually, this will cross to the upside, but the only thing I don't like is this RSI is still curving to the downside at 44. And so we still have some room to go to the downside for the RSI. That's my only hesitation. We could look at the monthly charts. I mean, the RSI is just now crossing below signal line. Still has room to go. The stock RSI still has room to go on the monthly. And so that's where it's, you know, is this the bottom, or we still have potentially further downside? And I'm telling you guys, I mean, this market, this cycle, or I should say this 2024, 2023 cycle is definitely harder than the previous cycles because of all the volatility. And so, yeah, silver linings to stock RSI, but keep an eye if the RSI continues downward and we close below the 50 weekly EMA, more or less, I would say the bear market would be confirmed at that point, and then we would be really tailoring towards shorts, but we're going to play this level by level. And as far as Solana, so Solana's at 154 right now. 155 to 157 was actually a level I was interested in. Same on the weekly stock RSI, as it's oversold, but the RSI still has room to go to the downside. If we go to the daily chart, I mean, similar to Ethereum, you can see now how all of these charts look similar, whereas we're just getting to that oversold territory on the daily RSI, and then the stock RSI is almost there, right? And so that tells me, okay, that's why we could have a few more days of downward price action. Now, Solana's almost the same point Ethereum was at, where it was at its trend line support. You can see we're in this downward channel on Solana right now. And so if it breaks below this, it's not going to be good. And so I'm watching this closely. The next area of confluence, where you have this wick, we went down on October 10th. Just below it, you have the support here, would be at 144. That would be the next area of interest, 144. And then below that, 130. So anyone who's trying to catch some knives, which again, be careful, manage risk appropriately, don't put in more than you can afford to lose. But 144 would be the next interesting level, 145, then below that 130. So now it's just a waiting game here to see how the daily closes, to see how the weekly closes in 5 days. But like I said, with the way sentiment is and with the way outflows, 4 days in a row so far, about to be 5, and the way indicators are becoming oversold on the daily, that risk reward is starting to favor longs. And that's why GE is looking at longs right now, because things are starting to shift towards that direction. Shorts are getting overconfident, starting to pile up more, and market makers make money when they liquidate people. Obviously, if you have a lot of liquidity to the upside, you're going to curve it back to the upside at least short term, and then before reversing back to the downside. So that's what I'm watching for Solana. But besides that, again, I mean, we can look at the news articles again, and if you guys have any questions, we'll go ahead and answer them accordingly. But we have a few people obviously posting a few bull charts here, and I'm trying to see if there's any other big news items. And let's see. No. So Thomas was talking about something in the market. It says the current funding banking issues are largely being fueled by rebuild of the Treasury General Act, the U.S. government's bank account at the Federal Reserve. This started in June after the government raised debt ceiling. The target level for this TGA rebuild was $250 billion. Very interesting on that. Okay. So again, it's a lot to do with the Federal Reserve, and obviously the repo crisis that they had 2019, the switch from QT to QE, and a lot of that shaking up the market. And so, yeah, so there's a lot going on with that, and the Treasury with the federal government. So obviously that's going to play a big part macro-wise. And so I think it's a combination of over-leveraged longs, institutions getting wiped out, the government switching, quickly pivoting from QT to QE, and what's going on with the treasuries versus what we're seeing in the market, and obviously the uncertainties added on top of that. So yeah, so that's something that's very, very interesting and something I'll continue to monitor as the day and weeks progress. But besides that, I mean, again, guys, it's just a game of patience at this point and confluence and just waiting for the right opportunities. And so looking at a couple comments in the chats is, let me see. Okay, Ed was saying, why don't you look at ETF flows on CMC? So just because Farside is very accurate, and so I look on there. I'm assuming CMC has the same, but I've just always used Farside because they've tended to be the most accurate and up-to-date whenever they update their ETF flows. But I'll compare them with CMC, and if it's the same, then I'll just use CMC as well. Let me see. Just looking at a few other comments, guys. Ed was saying how many tabs you need to open. Oh, I need all the tabs open, Ed. All the tabs. Yeah, my RAM usage is definitely reaching its limit. I'm on this laptop. Let's see. Just looking at a few other questions, guys. Crypto Trader says, so would you DCA from 3270 to 3165? So no, I would. Again, the whole thing with the way the market's dropping right now, I would just be very intentional with where I want to enter, because a wide range could get you wrecked in this market. Because, you know, we were saying the next levels after 3270 is 2930 to 3050. And so if you have a wide range like 3165 to 3270, well, you could still get wiped out if it just keeps going down. And so I would potentially dabble around the 3270 level and then maybe have some invalidations, daily close below 3230, or, you know, something light, or just a 4-hour close below it. But I would look at the 4-hour, and then I would look at where the lowest wick went, and then I would place my stop loss at a 4-hour close below that. Because right now, a daily close below certain levels is shaping up to be way too risky, especially with the price action that we've seen today. And so, I mean, a daily close could be the difference between 5% down or 50% down. You know, so I think that looking at the 4-hour closes from now on is going to be a little more accurate and a little more safe, just as we navigate this market and as the volatility remains high, at least during this week and probably the next few weeks. So that's what I would say with that, is just still keep your entries somewhat tight, and then have your stop losses. I mean, it could either be below the wick, you know, below the previous wick, or could be a 4-hour close below that wick. Either way, but just make sure you're not over leveraging your portfolio or investing too much. Like, you know, 10% of your overall portfolio max in these trades. Let's see. Rebellia says, NASDAQ gap fill done, 21 EMA tagged. Now we need the FUD to settle down, and hopefully we bounce soon. There you go, Rebellious. Yeah, I know Rebellious has been looking at the relationship between stocks and crypto, as far as, you know, stocks controlling most of this movement, which I do agree that TradFi is, you know, the person who's driving the car at this point versus crypto. And so once that bottoms out, then yes, we could end up bouncing. So I think that things are lining up so far with sentiment levels, liquidation levels, etc. Let's see. Azza says, what about new moon? Will we still pump or just stay sitting in cash and holding our assets? So I think you mean full moon, Azza, for tomorrow, November 5th, is yes, the full moon is technically still bullish, but at this point, guys, I mean, it's more so, it's not the end all be all, meaning macro factors can still override it. We can still go down tomorrow. You know, it doesn't mean we have to bounce. It's just something to add. If there's some positive catalyst, then the new moon does aid in that. And historically, based off of data, you know, it has gone up, I believe, 70 to 80% of the time on full moons, I should say. So yeah, it's not a close your eyes and buy on the full moon day, but it's, okay, if there's other positive news, then yes, it's probably going to add to that as far as price appreciation. Let's see, reading a few other questions. Yeah, with the Trump tariff decision tomorrow, exactly, right? If there's some positive news from that, then yes, we could pump. Now, what is the positive news? They're going to discuss if Trump's global tariffs are technically legal or not, and if they're going to end them. If they end the tariffs, I'm assuming that's going to be bullish for the markets. But at that point, there's going to be more volatility, because what's Trump going to say after that, right? Is he going to appeal it? Is he going to try to fight it? I mean, then there's just more volatility in the market. And so you're kind of, you know, doomed both ways. But we'll see how the market reacts, because there's still other factors at play. But yeah, like Crypto Trader says, waiting after tomorrow to set any limit orders, yeah, with volatility. Let's see. And then Ed was linking a Polymarket poll where he says, what will the price of Bitcoin hit in 2025? It looks like 93% said below 100,000, and that's actually was correct. And then 49% say below 90,000, and 22% say below 80,000. Very interesting for these bets for Polymarket, guys. Polymarket has been spot on, honestly. And so if Polymarket is saying that we're going to reach below 90 or 80, we could potentially reach below there. I mean, that is a very interesting metric. And yeah, GE says level by level, shorting currently. Bernardo says, where can I put the green EMA that you have? So that's the 50 EMA. So just go on TradingView, and I'll show you real quick. Just go on TradingView and go to your indicators tab up in the top right. Type in EMA, and then click Moving Average Exponential. And then you'll be able to add that. I mean, and then once you add that indicator, it's going to come up with this, this line. You can double click the line and then click on input and just type in 50. And then that'll give you the 50 EMA that I'm looking at right now. And you can change it to green or what have you. So yeah, I'll put it back to 200. because I have the 200 and the 50 EMA up there. Let's see. Rebellious says ETH has a yearly pivot at 3178. Looks like we will tag it either tonight or in Asia tomorrow. There you go. Yeah. So patience is the name of the game. And like GE said, please low leverage. Absolutely. Sugar says, have you closed your ETH position? So, I mean, technically it's still waiting for a daily close below it, but yes, it will be closed. It will be closed. Technically still open because I was waiting for a daily close, but I'm assuming that the daily close will be below 3460, but you never know. But yeah, I would definitely recommend managing that position accordingly. And if you haven't closed it yet, then I'd probably have a hard stop, obviously above your liquidation price, because yeah, it doesn't look like we're going to bounce above 3460. So that would be my recommendation on that, is just placing a hard stop, probably, close to below where it's at right now, maybe 3230. Nobody says, will you do some lessons how to make a daily market analysis? Yeah, as far as our macro analysis and like fundamentals and technicals, kind of our day-to-day, we can definitely make that. And I can definitely show you guys how I research certain macro news, certain fundamental news, and how I prepare for the day. Absolutely. Yeah, we could definitely make that, Nobody. And I can add that as a course as well. I can call it, macro fundamental analysis, and even on-chain, how I combine all of that day-to-day and what my routine is like. So absolutely, we'll have that. All right, guys, I'll go ahead and give another 30 seconds if anyone has any other questions. I know the stream was fairly long, but I believe it was much needed because this, again, another Black Swan day. And so we always said that we'll have emergency meetings if we do have these days, because it is, one, unexpected, but very volatile. And, we need to update you guys with what's going on in the market. So Nyko, Shem, or GE, did any of you guys have any comments before? Let's see. Mitio says 4-hour chart on Solana. Yeah, I'll do that real quick. Let me get that up. So yeah, potentially here, the 4-hour chart on Solana. You could argue if we have an inverse head and shoulders on the RSI, but still you can see the stock RSI is curving to the downside on the 4-hour, so not the best looking chart as far as continued downside here, because you can see we did retest this trendline support, and then it closed below it on the 4-hour. Now potentially could be retesting as resistance and then lower. So yeah, not looking too good there. Aculite says, we back to October 10th. Exactly. Yeah, we're back to October 10th. And so that's where it's, again, one of those things where these events unfortunately happen. Sometimes we feel the wick, and sometimes people don't learn their lesson. Institutions get liquidated again. And now we're seeing that come to fruition. And again, we'll see what institutions got carried out this time around. But I think that from October 10th, this was more subdued, obviously, because we didn't have the huge liquidation cascades of 20 plus billion and coins going down, 70% or more. So it was more subdued, but still not really any less painful, because we dropped much more than people expected, at least in one day. These levels were still expected as downside targets, but the fact they happened so quickly today, that's what makes it more painful than usual. Vic said MMT. Yeah, MMT is doing great. That's a token I've actually talked about a lot. Made a couple posts about Momentum Finance. And so great to see on that. That's been doing great. But with that, guys, let's see. I will say, Nyko, do you have any closing comments? Then I'll pass it to Shem and then GE.
I finished with a little joke. At least Astor is green on the day. It's sitting green. It's so ironic. This market never ceases to surprise us. But if we have a system, then we can take the probabilities, make the probabilities on our side. That's what matters at the end of the day, is how much you keep and how much you lose when you lose. So make sure you don't lose too much, and it's not long-term liquidation. I think spot portfolio should be the most of your capital, and this is what gives you endurance in the game and skin in the game for the long term.
Absolutely. 100%. Shem, what you got for us?
But pretty much same as Nyko. I would just add and reiterate that even if the bear market comes, I wouldn't worry. I wouldn't sweat it. In my opinion, and not only mine, a lot of people that I've been working with, the best time to make money and the best time to build is during the bear market. The volatility comes down. It's so much easier to read the graphs. And just to mention this here, the way I learned how to actually chart graphs and trade and do all these things was actually during the bear market. I can't even imagine how crazy it is to. I'm learning a lot during the bull market, to be fair as well. But it's these little 5 to 10% jumps that really help understand what GodsEntry was saying 20 minutes ago. How it is important to plan your trades. How it is important to understand what you're doing before the trade starts, rather than having these hectic market crashes and you're trying to learn how to leverage, how to go back and forth, and the stability and quote unquote the dualness. I wouldn't call it the dualness, I would call it the stability. Just provides exactly what every trader needs to learn how to understand how to manage their assets and really slowly, gradually move with the market until the next bull market. That's all I have to add. Back to you guys.
All right, GE, you have any closing remarks for us?
Sure. Trade safe. Use low leverage. Don't do what I do. No, I'm kidding. Just don't use high leverage. You see my high leverage on my trades. I'm trying to get us into safe areas. So please trade safe. Use stops. And don't worry about if it's a bear market. We make money in both directions.
Absolutely, guys. A lot of great advice from everyone there. And I saw some links of some Binance coins, Giggle and Astor doing good. So maybe Binance could be responsible for some of this price action. And there's a lot of manipulation going on. I will say that. So just always be mindful, guys. This market always volatile. So at the end of the day, you can't control the market, but you can't control yourself. You can't control how you trade, how you react to it, the levels you bet, the risk risk reward, and how you choose your trades and manage your positions accordingly. And so that's what we're focused on here. We're focused on walking you guys through it, managing and helping you manage your positions, and also helping you manage your emotions, which is arguably the hardest part of trading. And so as long as you have your emotions in check, which is then based off the technicals and making sure that you are practicing proper risk management, then that's how you can play the long game and extend into next year and the year beyond, and then consistently grow those profits. So it's all a game of probabilities, and we're aimed on making sure that you guys have the best trades that are plus EV and on the positive side of the probability versus negative. So with that said, guys, thank you so much for watching. This is recorded, so I will upload this to the recordings channel within the next hour for anyone that missed it. And yeah, for now, we're just going to play it level by level, and we'll keep you guys updated every step of the way. So thank you guys so much for watching. Hope you guys have a great rest of the week, and until next time.